TheoTrade. This is Don Kaufman. December 21st, 2020. About 10 minutes to go to the cash close on a day. It's just got downright wild. The sellers got rejected, or maybe they're just warming up here. Listen, the S&Ps are down 30. As I said, you got about 10 minutes to go to the cash close here. And what are we looking at inside of the S&Ps? I'll tell you exactly what we're looking at, all right? Tesla causing almost all of the sell side activity specific to the S&Ps. However, Tesla is getting the volatility crushed out of it. Listen, there are a lot of details to go through, okay, on this Monday's trading session. Let's start to break it down. Again, as I said a moment ago, this is a very unsettling day. And the reason it's such an unsettling day, look at the overnight lows here, okay? The S&Ps, you know, from my perspective, they just paved the way lower. They really, if you will, displayed the capability, okay, of the markets to still throw off huge volatility, okay, and huge size. So we trade 35.96 in the overnight trade, okay. The VIX, right? Let's actually deviate over here for a second, over to the VIX. The VIX actually spiked all the way to 31.5 before actually pulling back in. The bonds spiked all the way to what? 173 and 24 ticks to actually pull back to 172 and change. I mean, take a look at some of the moves. The dollar, right? The dollar, absolutely monumental size move on an intraday basis. And lo and behold, which we're going to look at here again momentarily, the volatility futures also spiked up, but they have not necessarily pulled back. Again, we'll look at that momentarily. And in fact, you're actually seeing volatility going up here with about 8 minutes left inside of the trading session. So let's start to actually break this down. One of the first things that I want to mention here is I kind of detailed a little bit. So you got the S&Ps down 32 handles, right? Let's take a quick glance at Tesla. Tesla is directly responsible for the loss inside of the S&Ps. Because today, you can't point the finger here necessarily at the financials. The financials are up by the tune of 1%. The monsters of tech, okay, they're massively unchanged. Take a look at the monsters of tech today. That is Microsoft, it's Apple, okay, it's Facebook, it's Amazon, it's Google. They're unchanged, okay? In fact, you've actually got Microsoft having a ripping day to the upside. So what gives? How could the S&Ps possibly be down? Again, this is where we point the finger towards Tesla. For approximately a $10.60 move inside of Tesla, that's the equivalency of the SPY moving approximately 1 point. So think about that for a second, because you do have Tesla in effect down, okay, almost $50, which, if you're thinking about it, all right, so Tesla's down about $50. Hey, just make it for every $10. It's going to, decrease or increase the S&Ps by about 1 point. Okay, you're basically influencing the spiders right now by almost a full $5 simply because of Tesla. But before you start pointing fingers, yes, Tesla is absolutely impeding upon the S&Ps today. Before you start pointing the finger, don't go too far. A lot of the volatility is starting to get crushed out of Tesla. All right. The volatility is absolutely coming down. Here, we're actually going to open up the January, okay? The January expiration. This is a standardized expiration with 25 days left. And I just want to highlight for 1 second, okay? Take a quick glance. There's approximately an 82 volatility on there, okay? It's about 82% implied volatility. But if I actually jump over here for just a moment, okay, to think back is just end of day data. End of day on Friday, okay, you're actually sitting at an 87% implied volatility. So you're seeing, again, you are seeing the implied volatility start to get squeezed and the life starting to get squeezed out of Tesla. In fact, if you start looking at Tesla, it had, for the most part, a nothing day. All right, got crushed a little bit on the open. And for the most part, this is the first move that it's really made, okay? That is, again, it's impeding upon, if you will, the S&Ps. So Tesla's a little bit of a drag to the S&Ps. Again, you can work with the number of about every $10.60 that Tesla moves. It moves the spiders about $1, okay? Just rounded, a $10 move is equivalent to about a $1 move inside of the spiders. You see the influence, okay, that it can have. All right, so again, as this, we work our way into this like really unsettling, supposed to be holiday week of trade Monday, let's go a little bit beyond Tesla, all right? Let's actually cruise over to the volatility futures because I think this really resonated with me. The volatility futures spiked 27 and actually pulled back. That's actually not the concern. The concern over here, all right, is the difference. And again, this is something we sometimes talk about with contango and backwardation, okay? All I'm getting at over here is the differential between the January volatility futures, okay, like Feb and March. They really, okay, tightened and narrowed the scope of that today. And what I'm getting at with this is quite simply, for those of you that speak a little bit geek, all right, the January volatility is still below, okay, February volatility. Now, if this were to invert, that would mean kind of all hands on deck. There's some pretty severe sell side activity if that were to invert. But if you take a look at the net change, specifically today, okay, 30-day volatility futures, those January volatility futures, okay, are up $2.20 against the fact that the February volatility futures only rallied about $1.50 and change. So we really closed the gap today by the tune of almost 70 cents, which again is a very, very large, okay, very large move in the volatility futures. And this is something to be watched carefully because if we actually invert, again, inversion would mean that the January volatility futures start to exceed the February volatility futures, then we're going to be in it and we're going to be in the throes of volatility. Also very interesting on this front that the Feb vol futures, they now are exceeding the 86-day, which is the March volatility futures. So we are in a little bit of an inverted state over here. Next couple of days are absolutely going to matter. All right, one other aspect I want to mention in terms of getting like a little unsettled on this trading day. Take a quick glance at the VVIX. That's the volatility of the Volatility Index. Took off to the upside, right? Pretty much the cash open. It isn't pulled back that much. So when you're seeing like, all right, the marketplace rallied here, and that's why I was saying like, the sell side activity just got outright rejected today, especially in the Russell. I mean, the Russell is 100 handles off, okay, the lows. So just take a quick glance. There we are at 1878, okay? We are on the bid right now inside of the Russell, flying to the upside. Again, almost 100 points off the lows, like a 5% move inside of the Russell today. But nevertheless, volatility, some of this just doesn't add up. The volatility took off to the upside. Again, right at the cash open. Ironically, that's kind of where it's going to close today. And this gives me kind of an uneasy feeling. And that's why I said the sellers got rejected, but they may just be warming up in this particular circumstance over here. Let's move beyond that, okay? Jump right down to the banks. So here, once again, and we mentioned this on the Friday night video, and I'm going to mention it again. Right now, okay, here today, this is the linchpin inside of the marketplace. It's going to be the linchpin in the marketplace moving forward. You've got the financials. And the financials this morning, okay, took a turn for the worse. When the financials dipped, I want you to see the damage that was done to the S&Ps, because the damage in the S&Ps, it didn't have to do with Tesla. It didn't have to do with big tech. Everything right now got exposed when the financials saw sell-side activity early in the trading day. Do not forget this in the days to come. If you're worried about sell-side activity in the marketplace, you got to watch the financials. Okay. If you're worried that the marketplace could come apart at the seams, even in January, you got to watch the financials. Okay. Once again, the financials are what got us here. And when I say got us here, I'm talking about the S&Ps to the 3,700 handle. Okay. I'm talking about the Dow up in the neighborhood of 30,000. Okay. That's what got us here. This most recent rally. Now, the financials have done absolutely nothing, okay? They have done nothing recently. We're just channeling back and forth. We expected them to burst to the upside today. Sure, maybe you got to move from Goldman Sachs, but everything else, okay? When I say everything else, in terms of the financials, where are they? Well, pretty much the same place they have been. Maybe a little bit of a pop to the upside, okay? But people, categorically speaking, all right, the marketplace is in very large part inside of the hands of the financials. Again, everything got exposed when we saw that wicked sell side activity inside of the financials in early trade. Feel free to examine that one yourself. Okay. But we had about a half an hour of sheer terror in the financials, which took the S&Ps down. Okay. Not just a little bit. Recognize that they were trading during the session to 36.25 before rebounding some 50 handles. It's all right now, okay, about those financials and will be in the days to come. With that, the S&Ps, as I said, they're well off the lows. All of the sell side activity at this point is brought to you by none other than Tesla. Sit back and enjoy some of the ride today. We already hit the lower edge of the expected move for the week inside of the SPX. Anticipate a lot more volatility. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.